All right, let's get back to the U.S. markets and a global picture. Richard Yetsenga, the Group Chief Economist at ANZ Research, is now joining in on the show. Richard, thank you very much for that. Season's greeting from everyone here in everyone here in India. We're celebrating Diwali, so thank you very much for joining in. Lots happening, right, on the U.S. economy front. Rate cut expectations, the U.S. 10-year yield slipping below the 4% mark for the first time in April. The labor data has been weak. Gold has been on a tear. Tell us how you're seeing the markets now.
Well, I mean, in all of that mix, the good news is the data has been broadly fine. I mean, obviously, we didn't have the last payrolls number, but in aggregate, roughly as many misses, there've been kind of hits the other way. And so even though there's a lot of noise and a lot of things we need to keep track of, the economy seems to be pretty constant. I mean, in some ways, that's disappointing some of the previous expectations for a lot of Fed rate cuts. But it certainly makes me take things in my stride when markets move around a lot like they are, and we've got headlines about potential cockroaches and other sorts of infestations. If I go back to basics, the US looks like it's still handling what's going on in reasonably good shape.
So those cockroaches that you're talking about, you're referring to the regional banks and the slide that we had? Because it just seemed, if it is linked to that, there were only two cases. What got reported overnight, and it seemed a little more idiosyncratic, linked to those banks, specific borrowers, rather than a broader systemic issue with regional banks.
Look, I'm probably referring to the comment that where you find one or two cockroaches, there's normally a few more hiding, if not in plain sight, at least where people should have seen them. So, look, after the run we've had in credit, generally globally, given the narrow level of credit spreads, I don't think anyone should be surprised by some idiosyncratic problems. The real macro question is, and obviously those idiosyncratic problems matter if you're directly exposed, but the real macro question is, is there the tinder there for those idiosyncratic problems to start a brush fire that becomes a much bigger issue? And on that point, I'm still reasonably sanguine. I think in general balance sheets, private sector balance sheets at least, are in good enough shape actually that what we're seeing is likely to remain idiosyncratic and contained, rather than become general.
The cockroaches is the Jamie Dimon comment. When he
Correct.
said that you can see one, two, but when you see one, two, there are probably more, and that's the time when your antennas need to go up.
All right. Hi, Richard. Good to speak to you. I recall, Richard, our last chat, right, when you were telling us that ratings, well, it's good, but you'll be looking at some kind of reform measures that need to come about for the Indian economy. And we've got a couple of them, right? We've got some kind of action on the monetary front. We've got GST 2.0, that is a bit of a rejig in terms of our taxation policy here. And the hope is that the second half of this fiscal, the Indian economy actually does find its footing, and from there on, just look upward. Your reading of the Indian economy, as well as our markets, the FIs, they've deserted us for the last year or year and a half or thereabouts. But there are mild signs they're actually coming back. So your comment on both.
Yeah, some good points there. And certainly when you look at what India has done on GST reform, India might be the leading economy in tax reform at the moment, certainly of the economies I follow. If you think about where there are kind of structural fiscal problems, and in the advanced world, the UK, France, Japan, the US, India is way ahead, even in terms of advanced economies that don't have such pressing fiscal issues, but where there's a future problem really emerging in the tax system, and Australia is a good example of that. India is doing a lot more on tax reform than those economies, so definitely a big tick for the Indian story there. I think the other thing in favour of some kind of cyclical outperformance from India is the fact that there has been some credit tightness in the market, driven at least partly through some kind of some regulatory efforts to slow lending in some of the consumer sectors. I mean, they obviously impact the economy through the credit mechanism, but then those effects pass, and the things like the positive signals from the equity market, I think, are going to have more fertile ground to feed into. So, look, 2026 feels like a better year for the Indian economy than parts of 2025.
Richard, morning. Just a brief last question. Gold, this unstoppable rally, 4% in one day, 10% in a week. I mean, there's, of course, there's chase which is on, but is it showing us, should we read something deeper into it and connect it to, bad stuff, or not necessarily?
Look, bad stuff is probably quite a good description because it's hard to define. I don't know anyone that's got a good valuation metric for gold that pinpoints, even within a reasonable order of magnitude, why the price is where it is. And if it was $2,500 an ounce a year ago and it's over $4,000 an ounce now, and of course the daily momentum indicators still look very, very strong, who's to say what the right price is? We've already actually, Jamie Dimon's name's come up once in this conversation. I mean, the view he expressed on gold was that, and I'm summarising, look, for a long time, it's hard to find a reason not to own gold. There seem to be a lot of potential pockets of problem in the global economy, and so it does recommend itself as an asset class. But he said I wouldn't own it because the transaction costs are too high, they're 4%. I mean, maybe the upshot of that is buy some gold jewellery and wear it and use it and enjoy it and convince yourself it's an investment, because I do agree that gold is telling us something. And what's most likely is it's not telling us about France or the UK or Japan, all of which have pressing fiscal issues, because historical flight from those kind of problems would usually be the US dollar, but the dollar's down. So I think it's telling us about the dollar.
I don't know, Richard, you've ever interacted with Willem Buter. He was this chief market economist at Citi. He wrote an article in the FT essentially urging central banks to sell their gold. I mean, not all of it, but basically his point was that, it's just too much concentration. But as he says, he calls gold a 6,000-year-old bubble. So he's been wrong for a long time. He accepts it. It's interesting.
Well, 6,000 years is a long time to be wrong. You might want to reevaluate your investment thesis, I would suspect.
Yeah, I told him that. And that interview will air later. But anyway, it was an interesting sort of, other side of the view. We'll air that interview later. Thanks very much for joining us, Richard. Really appreciate your time and good speaking with you.